Addis Business Talk with Khalid and Marid, the first all-English business podcast in Ethiopia. We'll be talking to policymakers, investors, business leaders, and entrepreneurs to bring you the latest development taking place in the Ethiopian economic and business climate, and more importantly, what it all means to you.
Addis Business Talk.
Good morning, good afternoon, good evening from Addis Ababa. This is Addis Business Talk with Khalid and Marid, now of course gone fully digital for online streaming. My name is Khalid Mawi, along with my co-host Marid Bisrat. Thank you everyone for joining us. This show is of course brought to you by Pragma Investment Advisory, an investment management and business advisory firm based here in Addis Ababa, along with our partners at 251 Communications, prominent marketing and communications firm based in Addis as well. Now our guest today is of course Melesse, a senior macroeconomic advisor to the National Bank of Ethiopia, as well as to the Prime Minister's office. Our discussions will mainly cover the much-awaited formation and launch of an organized capital market in Ethiopia. Finally, if I may put it that way, especially around the government's major undertakings and planning toward this process. What are the economic implications and socio-economic benefits of a capital market specifically for Ethiopia, and what the capital market proclamation entails? Ato Melesse, a very warm welcome to the show, and thank you very much for accepting our invitation to join us for these important discussions.
Thank you, Khalid. Thank you, Marid, for inviting me.
Excellent. Just as an icebreaker question to kick it off, perhaps if you can give us a bit of a background on how you joined the National Bank of Ethiopia and your current role as a senior macroeconomic advisor. And of course, we know that you are part of a team of professionals, so it'd be great to also tell us about your team and how it's set up.
Yeah, thank you very much. So I joined the National Bank of Ethiopia. I actually rejoined, I would say, because I started my career a long while ago at the National Bank of Ethiopia in the former research department as a junior researcher. And after working for a while, I left, for graduate study abroad. And I stayed a little bit abroad again, working even after graduation. And then I rejoined the National Bank of Ethiopia about, I guess, a year and 8 months ago in June 2019. And my responsibility is to advise the governor on key macro financial reforms, including the capital market reforms, but also monetary policy reforms, foreign exchange reforms, and other financial sector, macro financial sector issues. As you also mentioned in your introductory remarks, I also support the Prime Minister's office on the same macro issues, especially discussed at the Macroeconomic Committee in terms of analytical support and also policy analysis. In particular, with regard to your specific question about the team that worked on the capital market and working on the capital market issues, we have a team that constitutes for both advisors with expertise in other countries from abroad who joined the National Bank of Ethiopia, and also the local core team from the National Bank of Ethiopia, from the Ministry of Finance, and we also have experts from the Attorney General, because capital market issues involve legal issues, financial sector issues, and other related issues. So we have a team that has diverse set of expertise in different areas.
Interesting. That's very interesting. Thank you, Ato Melesse. So let's delve into the issue. Of course, Ethiopia is not new for the capital market. We had this during the empire time. Now we just, as a country, we just relaunching this. And as you rightly mentioned, that you have a team that at the National Bank who have been working tirelessly on this, drafting this proclamation, which has been recently approved by the Council of Ministers. So just to give us an overview and a background on the proclamation. Tell us, what is the Capital Market Authority? What are its objectives, goals, and the role of establishing this authority, and how it will help Ethiopia to develop its capital market? Let's start from this, and then we'll proceed.
Yeah. So the Capital Market Authority is a regulatory authority that will be in charge of, in broad terms, licensing, supervising, and regulating the market itself, and also all intermediaries, all capital market service providers. That's really the broader objective of the Capital Market Authority. Like the National Bank of Ethiopia is, for example, in charge of supervising and regulating the banking industry, the insurance industry, and the microfinance industry. The Capital Market Authority will be in charge of supervising and regulating the entire market, the capital market ecosystem. So what are its objectives? The key objectives of the Capital Market Authority include investor protection, protecting financial investors, people who put their money in the capital market. That's one of its key objectives. And the second one is to ensure that markets function, the capital market functions in orderly, fairly and efficiently. That's also very important to ensure that there is a transparency in the market, and the market is efficient. The third major objective is to detect and mitigate systemic risk. As you know, stock exchanges are prone to risks, especially crisis risks, and it's very important that the regulatory authorities has a system and a regulatory framework that detects, prevents, and mitigates risks. So these are the major objectives. Now the CME tries to accomplish or meet these objectives through its surveillance, through its supervision, and through its overall, regulation. And I think the third part of your question is its role in the development of the market, right?
Yes.
So ensuring the safety and security of the investors in the market itself, which I already outlined, contributes to the development of the market. It will ensure that the market will be healthy, it will develop in a fairly and contribute fairly to all investors. So that's one way of contributing to the market, and also this prevention of risks and protection of investors builds confidence, so that both investors and users of finance will participate in confidence. Finally, the capital market promotes capital market developments through creating an enabling environment for long-term finance. So creating incentives for financial investors to put in their money in the market, and creating also users of finance to issue securities to raise finance in the market. So these are the key roles of the CMA in establishing and developing capital markets.
Wonderful. So as a follow-up question, we understand that going through the drafted proclamation that this particular authority, the Capital Market Authority, will be set up as autonomous regulatory body. Could you tell us what does it mean, autonomous, like to be set up as a regular authority? What does it mean? And we know that the authority will also be some people would say that it will be accountable to the Prime Minister right now. Some people, they say that it should be accountable to the House of People Representatives. What is your thoughts on this?
Okay, so what does it mean to have an autonomous regulatory body? The regulatory body, the CMA, will be a government agency, but when we say that it's autonomous, in legal terms, it means that it will have its own juridical personality, in that it can sue or it can be sued. It can enter into legal contracts by itself as a legal person. That's one way of interpreting that it will be an autonomous regulatory body. It also has its own board of directors, which will make decisions on key, operational, aspects of the authority, and it will have its own budget funding source. That's key also for its independence. It will also determine its own human resource policy, its own salary scale, and it will be accountable to the highest office of the government. These are very, very important because they are related to what I mentioned earlier as building the confidence of market players, market participants, the public, investors, and service providers. It is also very important to have a capable and able regulatory authority, because it's going to regulate financial innovators who would be looking into any loophole to be able to gain from the market, right? Especially from the weakness of a regulatory system and a regulatory body. So it should be able to compete in the labor market for the finance, for example, compete with the market itself by attracting competent and able regulators. So that's why it's important to have its own budget, important to have its own personnel policy. That will help the building of that confidence. It will help to make sure that it will be discharging its responsibilities. So that's the importance, really. So in terms of your question on accountability, it's true that the accountability to the House of People's Representatives might sound better in terms of ensuring autonomy. And because of that, in fact, if you have seen the very, very initial draft of the proclamation, we had it like accountable, they say immediately accountable to House of People's Representatives. However, through discussion and consultation, we thought that for our context, especially as beginners, as starters, it was important that the capital market authority be accountable to the Prime Minister's office, to the executive branch, because it really needs the support and champion of the executive branch at the initial stage. Someone has to set it up. Someone has to provide finance to it initially. Someone has to make sure that its capacity is built. And usually the executive branch of the government has all the resources and to be able to help in that. So that's why we thought that initially it is better to be accountable to the Prime Minister. For that matter, as long as there is a political commitment, I think it's up to the decision. I mean, the decision of the government, whichever branch of government it is, to make sure that it's autonomous, and all other aspects of autonomy, having its own independent board, based on whose members are selected based on competence, having its own budget, having its own personnel policy, as I said earlier. All of these are there. Just only the accountability is shifted for this, the practical reasons that I mentioned.
Addis Business Talk.
Excellent, Dr. Melesse. Thank you for clarifying that. And I think it's consensually imperative that we need a well-structured, well-functioning, robust capital market authority. It implies, of course, as you've mentioned, it's undeniable that the competency and the levels of abilities of the individuals that are running it is also important to consider. Now, moving to what would be denominated, as you've recently had an interview with Atoza Medina on policy matters as well, The Ethiopian Securities Exchange, as it's referred to, or ESE, this is somewhat synonymous to what we'd call the New York Stock Exchange or the London Stock Exchange and so on. It would be important for us to know how this entity will be formed, who will take ownership, what will its major roles and responsibilities will be, and also as it relates to the planned tradable securities. We know that the treasury bills market is already open, but other security products will be, of course, listed as part of the tradable securities in the exchange. So if you can, in layman terms, help us understand what these securities are, along with a brief explanation of each of them.
Okay, very good. So let's start by defining what a securities exchange. As you said, it's also known as a stock exchange. The reason why we prefer securities is because stock is just one of the products that will be traded, that will be listed in the exchange. There will be other products, as I will explain, because this is part of your question, like bonds and others. So in simple terms, a securities exchange or a stock exchange is really a facility where securities such as shares or stocks, bonds, and derivatives, unit trusts, and other related financial instruments are issued, sold, bought, or redeemed. This is really what a securities exchange is. Market intermediaries such as dealers, brokers, they come together in this facility to be able to transact in the securities that I just mentioned. So by providing the facility, when I say the facilities, by the way, I'm referring to not only the physical infrastructure, but also the rules of exchange, the rules, the intangible infrastructure. The exchange can generate. So by providing these services to market intermediaries, the exchange can generate its own revenue, its own profit. So it's a very, in principle, in a well-functioning market, an exchange is a profitable investment opportunity, profitable investment business. So because of that, in the proclamation, the exchange, the Ethiopian Securities Exchange is presumed to be or will be established as a share company, whereby the private sector is expected to take the majority share of the company. The government will participate as a minority investor with no more than 25% stake, because we are just starting as a country. We are starting, it's a new venture, a new business. So the government needs to participate to provide confidence to the private sector to chip in. When we say the private sector, we are referring to the domestic private sector as well as the foreign investors as well. So that's basically the structure of the market, mostly private owned, but with a minority shareholding. By the way, the government's participation initially can also be rationalized by the very fact that the securities exchange is a very, very important market infrastructure, and the government needs to have a very small strategic ownership to be able to have also a say in the functioning of the market as well. So that's one rationale. In any case, it will be very small share. However, in the unlikely event that there was no private sector interest, the proclamation stipulates that the government can increase its share beyond the 25% limit, because the ultimate objective here is that there will be a market. And even in the extreme case that there will be no interest at all, the securities exchange could be launched as a fully government-owned company. But we don't anticipate that will happen, because we think that there will be sufficient private sector interest in the market. In terms of your question about the roles and responsibility, before that, let me talk a little bit about what kind of instruments or securities will be traded. I already mentioned during the definition a few instruments such as shares or stocks, debt instruments, unit trusts, and derivatives. So stock and share is clear because you know that even in the current system, when a big company, a public company is established, they establish by selling shares to the public. So what the capital market or the stock exchange, the securities exchange provides is the platform or the facility for trading of these shares that are already issued. Debt instruments, initially we expect only the public sector debt, government debt, T-bills will be traded there. Now, currently, because there is no secondary market, if you buy or if a financial institution buys, purchase a T-bill, let's say 1 year T-bill, it would have to hold it to maturity until it matures. But when there is a secondary market, it can sell it to a third party at any time, especially if it needs the liquidity. So there will be a secondary T-bills market initially, and as the market develops gradually, as we have more key institutions, let's say rating agencies, research analysts, etc. There will be also an opportunity for the private sector, especially corporates, to issue bonds. So there will be debt instruments for bonds as well. Mortgage, for example, mortgages could be sold asset-backed as mortgage-backed securities in the market as the market develops. So those are other examples of instruments. I mentioned already derivatives. Derivatives are by definition financial instruments that derive their value from the performance of an underlying asset, an underlying entity, such as indexes or even interest rates. So those derivatives, we anticipate only simple derivatives such as commodity futures, such as forward exchange. Forex forwards will be traded initially, but over time, more complex derivatives such as options could be traded in the future at a later stage. I mentioned unit trusts. These could be traded initially. Unit trusts are formed from collective investment units. So in fact, we think that retail investors will participate in the market through collective investment funds, such as mutual funds. What they do is they collect funds from the public, and they create units as like shares. They issue shares and to contributors based on their contribution, and those shares or units can be traded in the securities exchange. And finally, in terms of the roles and responsibilities of the exchange, as I said earlier, in terms of when I define the exchange, it provides, as I said, facility, the facility for the market, both the hard infrastructure and the soft infrastructure. The hard infrastructure meaning the trading platform, the soft infrastructure is the rules of exchange, and more specifically, it will be responsible for making sure that the market is operating orderly, efficiently, and safely. It will be responsible to ensuring that transactions and the actions of the members, the dealers, the brokers who will be participating in the market are consistent with or in compliance with the regulatory framework. It should be able to provide a well-functioning and up-to-date system, technological system. It should put in place a system for detection and mitigation of risk, because that's where the markets operate. And in general, will provide also access to information to its members as well as to the general public. So these are really the key functions and responsibilities of the exchange.
Thank you, Melesse. I think you laid out perfectly what kind of the product that will be on the Ethiopian Securities Exchange, and also the what will be its role in it. So, so moving on, as we know in other countries and also in the economic history of the world, capital markets are a means to raise capital and to allocate them efficiently and effectively to the specific industries and companies that really need them, and then to create wealth, right? And those wealth, those wealth that will be created will be also as a means for the population, for the wider population, to means to own it, right? They could purchase a stock, they could purchase, as you say, they could purchase a bond, securities, or a future, and it is a means to participate in the market. Also, it creates wealth, and it gives a sense of ownership for the country, for the population, right? So, but coming to our context, in our country, more than 80% of our population lives in the rural side of Ethiopia, and usually this kind of capital market activities or the trading of securities or of the stocks, be it bond or futures, or other products, happens mostly in major cities. As a policymaker, how do you think we can make sure that this capital market will be inclusive? Because you see, in other countries, at least 10 to 20% of their population owns a share or a bond in their capital market activities, and that gives that gives it a sense of ownership, and plus it is the means to own a piece of your pie, right? So how do we make sure as a country that this capital market will be inclusive? Tell us what are the approach the government is thinking to make sure the wider population will participate from all corner of life.
Yeah, that's a very good question. Just to be sure, the capital markets, the exchange, securities exchange, are not meant to be for the general public. I mean, they're not meant to be equitable in terms of the direct participation of the general public, right? You mentioned number percentages, for example, 10 to 20%. That's I mean, from a simple view, that's not equitable in terms of direct participation. Even in the US, the most advanced financial market, 2020, I think April 2020 Gallup poll shows that only 14% of households or families directly own securities issued in the capital markets. So we do not expect that the benefit of the capital markets comes through from direct ownership or direct purchase of securities in the market. However, the participation of the general public can be promoted through, as I mentioned earlier, collective investment funds. And institutional investors, such as pension, especially the pension funds, mutual funds. In the US, for example, if you include all of these participations, indirect participations, the participation increases to over 60% of families. So in Ethiopia as well, I think it is important that through building the confidence of the public in the market and in the investors and let's say collective investment funds, pension funds, and two, by having a policy that promotes savings through collective investment funds, savings through institutional investors. For example, voluntary contribution of pensions. If there is a benefit, if there is a tax benefit, like in other countries, the public will be encouraged to have voluntary savings. So these kind of policies would be able to encourage the public to invest in the market through professional investors, as I mentioned earlier. And I think more importantly, the benefit of the capital markets would be, would trickle down through the impact of capital markets on investment, promoting long-term investment, economic growth, and job creation in general. In particular, in the context where there is no market currently, there are a lot of opportunities that are not being realized, long-term investment opportunities. So by promoting that, by creating jobs, so that's really and also by the way, ensuring macro financial stability. For example, bringing inflation down through improving macroeconomic policy management. By creating a stable financial system, the capital markets would benefit the wider society, and these are really the main ways through which the general public can benefit from the capital markets.
Addis Business Talk.
Excellent, Ato Melesse. I think we can move on to our final question. You've pretty much comprehensively answered what was supposed to be the previous question that I was going to ask, which revolved around the capital market benefits and social economic gains that we can get from. Now, looking at a comparative scenario, a few studies have been conducted, such as, for instance, ones by the Brookings Institution or the CFA Institute, on the performance of capital markets in Africa and other frontier markets. Of course, we don't need to mention any countries, but some of these findings show that a number of these exchanges have been facing severe challenges. So things like deficiencies in multidimensional planning at the initial phase, illiquidity seems to be a huge problem. There's a certain level of riskiness of some assets. Trade activity is low in terms of volume. Problems of financial literacy, and of course, low compliance around transparency standards from the private sector or potentially listed companies. How much of a consideration would you say has been made by your team to learn from the failures endured by other countries, and how do you plan to mitigate some of these conceivable risks going forward?
Yeah, that's really, really an excellent question. The question, hits the nail on the head when it comes to the challenge developing countries face, and also this is really our concern as well, because it's one thing to launch an initiative. It's another thing to make sure that it's operationalized, it's implemented successfully. So we are cognizant of this challenge, and we have been, reading the experience of other countries, reading the principles of the industry, principle setters, to make sure that we are drawing the best lessons from the experience of other countries, from the principles, and from our own experience, by the way, in the regulation of the financial industry by the NBE, for example, and also the Ethiopian Commodities Exchange. So we have spent a whole lot of time in trying to draw the best experience, the best principles from these sources. One of the advantages of being a latecomer is actually being able to learn both from the success and failures of other countries or other earlier practitioners. So in this regard, our capital market development strategy has identified challenges in various areas, and also put together planned activities under each of these to be able to address the challenge. So let me go through the kind of the framework that we have in terms of identifying challenges and identifying mitigating factors, policy issues. So the first one is on the supply side. When I say supply side, I'm referring to the supply of securities. So the challenge usually faced by developing countries and starters is insufficient number of companies or issuances coming to the market, and limited number of or types of instruments or securities to be issued. So by the way, the planned activities, planned measures that we think will mitigate this challenge are not necessarily government measures. Some of them are also measures that need to be taken by the private sector. And of course, the government would also encourage the private sector to take these measures. So the activities that I mentioned under this challenge are not necessarily public policies, but also public, private sector, private sector activities. So I think in this case, the plan is to encourage the private sector to be able to coordinate, to be able to get ready, make the potential issuers, companies that will issue in the market ready. We think that initially banks, insurance companies that have already better record keeping and financial reporting, and also multinationals will be able to issue, but over time, the private sector needs to, especially through, chamber of commerce or other business associations, be able to organize themselves and get ready, make sure that there are companies who will be ready to issue in the market, and investor education from the government side. There will be investor education to make sure that the potential issuers understand what kind of issues, securities that they could issue to be able to raise finance in the market. So that's one area. Now, the second one is the demand side. On the demand side, demand for securities. And there, the issue is, do we have enough liquidity, enough number of investors, financial investors, to be able to participate in the market? The challenge usually that we identified based on the studies that we did include a very rigid investment policy for institutional investors, limited capacity of the institutional investors in terms of analyzing the returns and the risks of each of the securities, and limited retail investor participation. These are really the challenge. So what are we doing or we planning to do? Build the capacity of institutional investors. We have been providing training opportunities in collaboration with the Chartered Institute for Securities and Investment based in London. We have been providing trainings to institutional investors, and with the hope that will build their capacity to be able to analyze, as I said, the expected returns and risks of the securities in the market. And we also need to review, we need to, or the government needs to review and revisit the policies, investment policies of pension funds, investment policies of the insurance corporations. We need to have a policy that promotes long-term investment, as I mentioned earlier, so that even retail investors are able to, or are encouraged to invest, to save more. We need to have a broader financial literacy focused on capital market issues. We also need to attract foreign investors, by the way. That's also, especially for starters, a very good source of liquidity. Now, the third challenge that we identified is with regard to market infrastructure and intermediaries. Usually the infrastructure that's needed for a smooth functioning of capital markets is more advanced for countries like Ethiopia that are just starting, highly technical, requires a significant amount of capital, requires a technical know-how to be able to maintain it and have a smooth functioning. So that's one area, right? Another area is limited availability of capital market service providers and information service providers such as credit rating agencies, research analysts, etc. So in terms of planned activities or mitigating activities, we hope that we will be able to attract well-established exchange, let's say, NASDAQ, the likes of NASDAQ, the likes of London Stock Exchange, to have to invest in the Ethiopian Securities Exchange. They can invest. They can bring their technology, their know-how, their knowledge in exchange for a stake in the exchange. That's what we are hoping to achieve. That's kind of the near-term solution until we build our own capacity, our own knowledge base on that. And also we have a near-term to medium-term capacity building to have our own knowledge base, our own capital market service industry. In the near term, foreigners can come, and we are also providing, as I said earlier, training and certification programs to potential service providers, potential institutional investors, and academic institutions, because that's also very important for the long-term capacity building program, because we need to have build our own knowledge base, and that's where the long-term solution, the medium to long-term solution, focus on build capacity for training locally, and make sure that the academic institutions incorporate capital market issues in the curriculum. The fourth issue is the regulatory and supervision. The challenge is inefficient or ill-suited regulatory framework, weak supervision authority, lack of credibility of the regulation, lack of coordination among regulatory authorities, and the like. Now, we have already started, we discussed earlier, in terms of building developing a robust regulatory framework. The legal instrument itself, the proclamation, is the starting point, but in terms of implementation, I think that's the most important part. Of course, a lot of work is needed to be able to make sure that we operationalize that framework. Now, finally, by the way, I mentioned earlier, lack of coordination among regulatory authorities. When I say that, coordination between the Capital Market Authority, the National Bank of Ethiopia, and the Accounting and Audit Board, because they really have overlapping regulatory functions, because they will be regulating the same entities with different functions. So they really need to have that coordination. One way of mitigating that, we try to mitigate that, is by making sure that the National Bank Governor and the Audit and the Accounting Board Director will be the board members of the authority. So they will be ex officio members, permanent members. Now, finally, I think the broader enabling environment, macro environment, is very, very important. In the context where there is no macro stability, there is high inflation, debt is high, public sector debt is high. It's not. This is not favorable for the development of capital markets. If in the context where the financial sector in general is not robust, it will not be convenient. If the tax regime is not favorable, the capital market development will be also affected. So, in terms of the first two issues, the macro stability and the financial sector development, there is already a homegrown economic reform program with the objective of exactly achieving this. So we are hoping that this will be achieved. Inflation will be brought down to single digit, public debt will be brought to at least a manageable risk level, and the financial sector will be able to strengthen. And this will help in terms of the tax. Of course, I think we need a separate work of making sure that the tax regime for capital gain tax, for as I mentioned earlier, financial investment taxes, all these tax policies should be able to conducive for the development of the market. So these are really the issues that we have identified through a study, and the mitigating factors or policy measures that we think are very important to be undertaken.
Wonderful. I must say that it gives confidence that the government has prepared thoroughly in terms of to prepare a mitigating policy factors as you lay it out. I'm sure we're no different from other developing countries, but at least it gives a very huge confidence that we are prepared for it in this wonderful journey that which the population anticipates, everybody anticipates. And it's a huge opportunity for the private sector also to engage. And as you rightly mentioned, that all this challenge that we will face as a country will be mitigated by a collaboration between the public sector and the private sector. So on that note, Ato Melesse Tashu, the senior microeconomic advisor at the National Bank of Ethiopia, it was a pleasure to have you on Addis Business Talk. Thank you for joining us.
Thank you very much for the opportunity as well. It was a pleasure for me.
Thank you, sir.
All right. Thank you.
Addis Business Talk.